Arthur Hayes, the founder of BitMEX, in his latest essay presents a foreboding prediction for the Bitcoin market in March, anticipating a severe correction of 30 to 40%. His detailed analysis, rooted in a deep understanding of market dynamics, outlines the complexities and driving factors behind this expected crash, respectively healthy but deep correction. And what's about? Immediately, Hayes begins his discourse with a cautionary reminder of the nascent state of the crypto bull market, warning enthusiasts not to be overly carried away. The crypto bull market is in its early stages, and we must not get carried away with our enthusiasm. He says, highlighting the uncertain journey towards the inevitable collapse of the fiat financial system. His prediction revolves around three key financial events and indicators converging in March. Hayes first points to the anticipated decline in the reverse repo program balance to a critical level of $200 billion, a scenario he believes will trigger market anxiety about future sources of dollar liquidity. He describes this threshold as a moment of reckoning. When this number gets close to zero, the market will wonder what is next, underscoring the gravity of this anticipated development. The second pivotal factor is the fate of the Bank Term Funding Program, which is due to expire on March 12th. Hayes portrays this as a significant test for the financial system, speculating on the decision-making process of the U.S. Treasury in the face of potential liquidity crises among banks. He articulates the market's anticipatory stance, suggesting that the market will start getting inquisitive many weeks before about whether or not the banks will continue receiving this lifeline. And the final piece in Hayes' forecast is the Federal Reserve's meeting on March 20th, where a rate cut is expected. This decision, in Hayes' view, is crucial for setting market expectations and influencing the dynamics surrounding dollar liquidity provision by the Fed and the U.S. Treasury Department. And Hayes then delves deeper into his tactical trading strategy in response to these events, detailing his plans to short the crypto market using Bitcoin puts, and he articulates his approach with saying, I will look to buy a sizable put option position on Bitcoin around this time, signaling his preparedness to leverage the anticipated market shift. An important aspect of Hayes' analysis is the potential impact of the U.S.-listed spot Bitcoin exchange-traded funds. He argues that the anticipation of substantial fiat capital inflows into these spot ETFs could initially propel Bitcoin's price to soaring highs. However, he warns that this upsurge could be followed by a dramatic correction, exacerbated by a liquidity and squeeze. Imagine if the anticipation of hundreds of billions of fiat flowing into these ETFs at a future date propels Bitcoin above $60,000, he says, illustrating the potential for a steep decline. And Hayes explains that a market already heightened by ETF speculation would be particularly vulnerable to a sharp correction, potentially worsening the downturn to 30 to 40% in the event of a liquidity crunch. Hayes then shifts to discuss his tactical trading decisions in response to these indicators. He shares his plan to initially short the crypto market using Bitcoin puts, followed by a return to selling U.S. Treasury bills and acquiring more Bitcoin and cryptocurrencies. In explaining his approach, Hayes states, I will look to buy a sizable put option position on Bitcoin around this time, indicating his readiness to capitalize on the predicted market downturn. And furthermore, Hayes details his strategy for Bitcoin puts, explaining the rationale behind choosing puts expiring on June 28th and his approach to selecting the strike price. So he emphasizes an importance of timing and market dynamics, knowing I expect Bitcoin to experience a healthy correction from whatever level it is attained by early March. In his conclusion, Hayes contemplates various scenarios that could play out differently from his predictions. He considers the implications of a slower decline in the RRP, a potential extension of the DTFP by Yellen, or alternative outcomes of the Fed's March meeting. He notes that each of these scenarios could lead to different market behaviors, necessitating adjustments in this trading approach. At press time, BTC traded at $43,940.